Attendees are in listen-only mode.
Good evening, friends. It's Steve McKnight here. It is Monday, the 4th of February 2013. I feel like such a klutz because at today's main webinar, I forgot to press the record button. So thank you for joining me for tonight's special encore presentation. Hopefully the second time round is just as good or perhaps even better than the first time round. Hello to those people watching at home on a recording afterwards as well. I'm pleased that you were able to join me. You know, over 1,000 people have registered to either attend the webinar live or get a recording of it. So I'm fascinated and I'm very pleased that so many people are interested in what I've got to do. You know, I bought my first property in 1999, and during the time since, there's been a large number of ups and downs in the market, and I have to tell you that I am as excited today as I have ever been way back even since the early days of 1999 when I was buying my first property. And I'll explain why over the course of this webinar. The truth of the matter is it is a fantastic time to be a property investor. It is a fantastic time to be taking advantage of one of the most incredible opportunities I've ever seen in regards to investing. But like most things, the majority of people are going to sit back and watch it unfold around them and then have regrets 6 to 9 to 12 months from now. Why didn't they take more action? And, you know, it's going to be a bit of a pity, but hopefully you won't be in that boat. Now, in tonight's webinar, it's used with software. You'll see there's a little camera there. It might be a little bit disjointed to you. We've sort of brought together two types of software in order to bring this to you, GoToWebinar, and also a little patch that my web guru, Dave Goldsmith, has put on so you can see some video too. For those people joining me live, you do have the opportunity to ask questions by typing them into the chat window. And during the presentation, if I have time, you might see me look over to this screen over here to see what questions are coming up. Alternatively, before I go home tonight, I will make sure that I have answered absolutely every question. Let's take a look at what is on offer over the webinar ahead. I'm going to give you a quick overview of my US investing. We're going to be taking a look at the state of the US economy. We're going to be wondering, are there still opportunities for Aussie investors to make money in the United States of America? I'll be walking you through 3 real-life deals that are on the go at the moment. One I've bought myself, which is a duplex, and 2 which are going to be purchased in the fund, all going well, that I set up. And I'm also going to be talking to you about how to get involved. And at the end of tonight's webinar, there will be a period of question and answer. As I said, I won't go home until absolutely everyone's questions are answered. Now, because I will be mentioning the property fund that I set up from time to time, I do need to include a general advice warning. This information is of a general nature only and does not take into account your objectives, financial situation or needs. You should consider the product disclosure statement issued by Plantation Capital Limited in deciding whether to acquire an interest in the passive income USA Commercial Property Fund. Past performance is not a guarantee of future performance and no earnings estimates are made. If you would like to get a hold of the product disclosure statement, you can download it from passiveincomefund.com.au. All right, let's get straight into it. Part 1, overview of my US investing. How it all started, I need to take you back to our Sydney 3-day mega conference in 2009, where a presenter by the name of Dan Eckelman came over to talk about US tax liens. Now, for those of you who don't know what a US tax lien is, it basically works as follows. When you own a property in the United States of America, you have to pay property taxes on it each year, roughly the equivalent of our rates here in Australia. A little bit high because they roll ambulance and fire department and various other things in there as well. Property taxes usually run between 1% and 2% of the value of the property each year. Now, you have to pay your property taxes by a certain date. Otherwise, certainly in the state of Florida, if you haven't paid it on time, the county will auction off those unpaid rates or property taxes to investors. And what investors do then is they bid, sort of like eBay, they bid on what interest rate they would like to charge the homeowner from 18% all the way down to 0%. And whoever bids the lowest interest ends up being the winner of the tax lien. Now, these tax lien auctions happen online in Florida once a year, typically in May sometime. And what Dan Eckelman came out to do in the conference of May 1999 was talk about how Australians could buy tax liens and get returns of 18%. Now, what happened was that Dan then went on to encourage people to attend a 2-day training about tax liens run by a guy called Tommy Senator. Now, Tommy came out to Australia to run the training, and I got to know him pretty well. And those people that signed on to do the training, I made a commitment that not only would I check this out, because it seemed honestly too good to be true, but I would actually go over to the United States of America and buy some tax liens and report back to the group on exactly what my experience has been. So the thing with a tax lien, right, is like I said, it's you're buying an unpaid property tax on a property. If it's not repaid after 2 years, then you can actually foreclose on the property to get the money that you're owed in interest back. Now, what happens when you foreclose is that the property goes up, in Florida at least, in some counties of Florida, the property goes up for online auction, and if no one bids on that property, it's yours. The mortgage is wiped out and it becomes your property. Now, there are, of course, a million different things you need to know, but I wanted to go and check out whether this was absolutely everything that it was cracked up to be. So in late 2009, October 2009, I trotted off to the United States of America to check it out. A tax lien purchasing reconnaissance tour, if you like. And so what it is, I left sunny Melbourne and I flew all the way to LA and then on to Florida. And in Florida, here's a map of Florida. You might be familiar with Miami. Cape Coral is down on this side, which is where Tommy Senator lives. You may have heard of Orlando, where Disney World is. But as I said, I basically based myself out of Cape Coral, Fort Myers area. Cape Coral, Fort Myers, as luck would have it, was the epicenter of the US housing financial crash. You'll see some examples of that later on. Here is an actual picture that I took of the very first time that I went over to the United States of America to buy tax liens. There's Tommy Senator on the right of your screen. This is Shane Jackson, a friend of mine who came over for the trip. This is where I was sitting. This is my old laptop sitting there. And there's my camera case. If you look in my wallet, calculator, look, it's all set out there. And I went over there to go and buy tax liens. Now, at an online tax lien auction, the properties that aren't sold at auction are available for purchase over the counter direct from the tax collector at 18% interest. And so the auction had well and truly happened. I turned up to Fort Myers in October and went to go and buy some tax liens that hadn't been sold at 18%. And as I did my research and came up with a list of tax liens that I'd like to buy, did what anyone would do in the circumstance, I hopped in the car and went and looked at the properties. And as we drove around, one of the properties that we came to look at was this particularly ugly one, and it's actually a duplex. You can see two numbers. There's actually a property at the front and a property at the back there. Now, this duplex had a tax lien available on it, but it was also for sale. And what pricked my interest with this property was that the asking price was, I think it was about $15,000, and we negotiated to buy it for $12,500. We then spent another $12,700 renovating it, which meant that our gross return was 38%. And I'm going to be honest, I couldn't understand what I saw about these ugly positive cash flow properties that others couldn't. And I asked Tommy at the time, I said, Tommy, how come there aren't more locals buying these properties? He said, Steve, you have to understand there are so many of these for sale and there are so few investors out there that there's too much supply. There's an excess of supply going on. So while I went over to the United States of America to buy tax liens, I ended up buying tax liens and properties. Now, here is the story of the very first tax lien that I bought, which I think is quite fascinating. You'll see here it says Lee County Tax Collector. So that's the county. And you'll see that the issue date was the 2nd of November 2009 and the redemption date was the 20th of November. So 18 days after I bought this tax lien, the owner came in and said, oh, I owe you some money to the property, to the tax collector. Doesn't pay me, pays the tax collector, then the tax collector pays me, says here's the money I owed you. Now if you look carefully, it says the interest rate's 18% and the amount of interest that I earned on a tax lien for $6,194 was $309.72. And when you do the maths, it's 5%, which is the minimum that you earn on a tax lien in Florida. Even though the interest rate was 18%, that's per annum, I got paid the minimum 5%, even though I had only owned the tax lien for 18 days. I thought, how good's this? This has got to be amazing. You know, you buy these tax liens, you earn 18%, you actually earn a lot more if they get redeemed earlier. Wow, this Dan Eckelman guy might have actually been talking about something that was fair income. So I was greatly encouraged. Not only had I bought a duplex for $12,500, I'd also bought some tax liens which started to redeem, and I was getting, as Dan had promised, check after check after check straight to my mailbox. This is a picture of me in my home at my desk while it was still downstairs. You can see the microphone literally on Skype calling the United States of America to buy another tax lien over the counter, ringing up the county and saying, yep, I want to buy it. And if you look really carefully, underneath the pen here is my credit card. Yes, you can buy over-the-counter tax liens using your credit card. Provided you know what you're doing, you could really set up a really nice business buying tax liens from Australia without all the complications of having overseas structures or anything, and earn sort of 15 to 18% easy. And that's why when I think I actually had more hair in that photo. That's a worry, isn't it? Look at that. Anyway, so I came back greatly encouraged, and to this day I remain greatly encouraged. I still own quite a number of tax liens a couple of years on. Some have redeemed and I've reinvested them. All right, so I'm just looking at any comments. So we have nothing really there. What do you think about tax liens, guys? Is it something you might be interested in? I would have thought so. I don't know any easier way of making money. You don't own the property so much as you own the debt associated with the property. But yeah, it's a fascinating way to have property-backed debt that is pretty safe. It's not foolproof, mind you, but it's a still pretty safe way to invest. All right, so getting back to our webinar. Oh, where have I gone? Hang on a second here. Let me see if I can bring myself back. Whee! There I am again. So let's fast forward now to 2010. So 2010 now, buyers started re-emerging. So 2009, it was carnage. I remember seeing signs out the front of banks that said, we're still open for business. We're going to soldier on, various other things like that. So 2009 turned into 2010, and I went back to Fort Myers again to catch up with Tommy and do some more buying, buy some more tax liens. And I noticed that the buyers that weren't there in 2009 had started to re-emerge again in 2010. Wow, what's wrong here with these 38% returns? Why am I seeing something that no one else is? Really did turn out to be a short-lived expectation. And more and more people started emerging, picking up these really incredible deals. So in 2010, whereas I was just about the only buyer and any silly offer I put in got accepted, now it seemed to be that, you know, there were other buyers there and there was a little bit of competition. It wasn't full on, but there was a little bit more competition going on. What I would say about 2010 is that the market stabilised, and one of the points you'll hear me talk about tonight is this thing called absorption. So in 2009, there was more property, imagine a bucket, there was more liquid coming into the bucket than the little hole at the bottom. So it got to the point where the bucket was filling up and filling up. By 2010, the amount of new listings coming on the market was roughly equal to the listings that were being snapped up by buyers, and so the market began to stabilise. And instead of the supply increasing, the stock got absorbed so that there was this stability between buyers and sellers. And what I got talking to people was a glimmer of hope that the worst might be over. It was still bad. It was still really bad. But people were thinking, well, maybe we may have seen the worst of it. Of course, 2010 turned into 2011. And what happened was when I went back again, I noticed a real difference. Now there were buyers competing for listings. So when a property got listed, there were usually 2 or 3 offers in the first 24 to 48 hours of the property. Sometimes those offers were even above listing prices. So now the buyers had really determined that these great deals were great deals. Everyone wants to buy yesterday's prices. Unfortunately, they couldn't, but at the yields that were on offer, 20% returns plus, it really was a great time to be buying property in the United States of America. At the same time that buyers were competing for the properties, there were fewer listings, which meant that investors didn't have it all falling in their lap anymore. They had to work a little bit harder. 2011 became 2012, and it was clear that we were well and truly on the road to recovery. House prices had increased 20 to 30%, even as much as 50 to 100%. Those duplexes I was buying for $12,000 to $20,000 had gone up double or tripled in price in some cases, and it was becoming harder and harder to find these really good high-yielding properties. Not only were the deals being snapped up, but there was actually construction beginning again, and that is always one of the real key signs to the housing market recovering, when people are starting to build. And anecdotally, the economy seemed to be getting a lot better because it was much busier at restaurants and retail outlets. Now people were saying the worst really is over. Well, 2012 became 2013, and I've only been back since Thursday of last week. I was over in the United States for 3 weeks, and I'm here to tell you, friends, I have been shouting from the rooftops now for 3 years about what an incredible opportunity the United States real estate market is. I remember coming back and doing a market update and showcasing these deals and saying, this won't last. You've got to get on board here. But of course, that was the wild, wild west, and it wasn't necessarily very easy for Australians to go and buy property over there. And then I created the USA Property Power Pack to give people education and empowerment to be able to go and do it. And then I said again in 2010, 2011, even 2012, guys, with the Australian dollar so high, Australian dollar up to $1.08, $1.10, and with US prices so low, you simply must take advantage of this opportunity. I've seen 3 great opportunities now in my lifetime. 1999, buying positive cash flow properties in Ballarat and Latrobe Valley. 2003, 2004, buying positive cash flow properties in New Zealand. And now 2009, 2010, 2011, buying these incredible once-in-a-lifetime properties in the United States of America. So I want you to do something for me right now. I want you to raise your right hand like this. What I want you to do is turn it around like that, and I want you to go, why didn't I take more advantage? I mean, I plowed nearly every cent of my own money into the United States of America, mortgaged up the house, sent the money over there, did all sorts of things. And even I think, my goodness, why didn't I do more? If I really believed it, was there anything else I could have done? And I'm lucky because I've made hundreds of thousands of dollars from the market reversing in the United States of America. But that little greed gland in my head, as much as I don't like it, still trickles along very nicely. So here we are in early 2013, friends, and I'm here to tell you that those really great 25, 30% yielding properties are gone like my hair. Nothing but a memory. But there is still opportunity in the United States of America, but the game is changing. It is now a growth play with income benefits, whereas in 2009 it was purely an income play and no one knew when there was going to be growth. If you can imagine with me for a second a graph that goes like that, we're no longer guessing where the bottom might be. The bottom has happened and the upswing is occurring. Now, I'm a little bit perplexed, to be honest, by where the future of the United States housing market is going. Friends of mine, Tommy Senator and Stu Silver, say, Steve, you don't understand. The market was here. Well, let's start here. The market was here. It went to here. And then it crashed way down to there, and it's only recovered halfway back to the middle point. So these guys are saying, you don't understand, Steve, there's a lot more growth left in the market before prices even got back to where they were before they started booming. Whereas I look at where they were, I got in at the bottom and see the price growth and think prices have already moved. So depending on what your bias is, that clouds your judgment, obviously. The people who live in the United States tell me, Steve, the best growth times are ahead. It's just that those really crazy income properties that you saw in 2009 got snapped up. And as prices rise, returns go down because rents haven't gone up yet. So you have a choice. You can now make a move in tax liens, as I did to start off with, and get those sort of 10 to 15 to 18% returns. Or you can buy direct property and have a growth play with income benefits. Or alternatively, if you want the higher income returns, you can stick with commercial property, which residential property is certainly improved, and commercial property is only starting to giddy up as we speak. In fact, commercial property over the last 6 months has been gradually hotting up. All right, so there's part one. I'm just going to pause now and see if I can answer some of these questions that are being asked. Les, good to see you online. Yabba dabba do. Interested to see you on the weekend and how much weight you've lost, mate. Hi, Steve. Tax liens look great. Our only hesitation is the currency exchange risk wiping out your profits. What are your thoughts on that? Oliver, good to see you online again. Look, one of the biggest risks, and we'll come to this a little bit later on, in investing in the United States is if the Australian dollar appreciates against the US dollar, and you are entirely right, you could lose a lot of money in exchange, or make a lot of money in exchange movements relative to the underlying value of the asset. My own personal view remains that the Australian dollar is historically overvalued against the US, which means that if I look at the upside of the US going down, if I look at the upside of the Australian dollar going down against the downside of the Australian dollar going up, personally I'm reasonably comfortable with what's happening and what the likelihood is of the Aussie dollar going down over the medium to long term. Of course, there is fluctuations along the way. Everyone needs to make up their own mind though. So they don't pay the tax lien in 2 years. Surely the bank forecloses, takes their debt prior to you taking yours. Richard, you would think so, but no. What happens is the tax collector, when a tax lien goes into foreclosure, writes to the bank, and the bank has the option of paying the tax lien holder out, which means you get your money back plus your interest. But if they don't, then when the property comes up for tax deed auction, then the mortgage is wiped out. Remember, with a tax lien, your objective is not to end up with the property. Your objective is to get paid out the money that you are owed with interest. Unfortunately, you just don't know when that is going to be. It might be a day after you buy it. It might be 2 years down the track, or in the worst case scenario, you might actually end up with the property. All right, how much risk is involved in this strategy, Steve? If you're talking about tax liens, unfortunately it's not a tax lien seminar. There is risk, but that risk can be greatly mitigated with a little bit of strategy. Dave wants to know, are tax liens still worthwhile endeavour now the market has changed? Most definitely, Dave. I can't wait to see how the auctions go this May in Florida. I know that I'm going to be a pretty active bidder. In fact, one of the things we'll talk about later on, for those of you who are interested, is the opportunity of joining me in the United States of America in May to attend a live tax lien auction. A lot of the auctions are happening online, but we're going to go to one of the old-fashioned ones, which is still done in person. How are the finance institutions in Australia treating borrowing for overseas investment? Basically, they don't like it. Brenton, in a word, if you want to borrow money to go and buy property in the United States of America, in Australia, you'll need Australian assets, and with those Australian assets, you'll have to borrow against them and take the money over to the United States of America. How many properties did you end up buying in Florida? We'll cover that later on in the webinar. Is there a book or course on tax liens you can recommend? Most definitely, Michael. I put out a product called the USA Property Power Pack. Now, there are tax lien books you can buy from Amazon.com, but if you want the product written by an Australian, i.e. me, for Australians, then you can still get it at the PropertyInvesting.com website. All right, so let's continue on. Part 2, state of the US economy. Now, there's a lot of talk in Australia. What's happened to me? It's coming back. There's a lot of talk in Australia about how the US economy is poised for all sorts of nastiness with the fact that their debt levels are so high. But there's a bit of reality I want to bring back to the market here. Now, looking at the world economy, the United States of America is hands down the #1 economy in the world as measured by GDP. It is more than twice the size of China. Now, here in Australia, we're sort of saying hallelujah to China, but what we fail to realise is the United States of America is a much stronger and a much bigger and a much more robust economy, and there's far less government intervention in what goes on. Not to say that the government doesn't intervene, clearly it does, but compared to China, and I have these people saying to me, Steve, what the US economy isn't going to, the US dollar is not going to be the world economy. It's like, hello, of course it will be. The US is the biggest economy in the world. While the US remains the biggest economy in the world, the US dollar will be the base currency. And what are we going to pick? We're going to pick the Chinese currency? I don't think so. Japanese? I don't think so. We're going to pick the euro? I don't think so. What's the next best alternative? The Australian dollar? It's fascinating because the US economy is twice as big as China, nearly 3 times as big as Japan, nearly 5 times as big as Germany, nearly, 7 times as big as France, nearly 10 times as big as Australia's economy, way down here at number 12. So you tell me, would you rather be investing in the world's biggest economy, which is on the rebound, or the world's 12th biggest economy, which is teetering? I know which one I'd rather be investing in. Now, of course, investing in Australia is a lot easier. We know it, borrow, etc., etc. And I'm not saying that the Australian property market is, dead. Far from it. There's lots of opportunities here, and sometimes the best opportunities are in your own backyard. But if you just looked at which market is going to be your friend over the next 12 months, I have no doubt in believing that the United States property market is going to be much more friendly to property investors than the Australian property market. If I could have my money anywhere in the United States property market, or the Australian property market, 365 days of the year, 24 hours a day, I would want my money in there. That's right, in the United States market, where the economy is on the bounce up, not the Australian economy where we are teetering along. All right, continuing on. Now, you don't just have to believe me. Here we go. Newspaper, USA Today, from the 23rd of January 2013. Front page, housing set to give economy a boost in 2013. Let me read a little bit for it. Home sales are set to keep marching upward this year after hitting their highest level in 5 years in 2012, economists say. Existing home sales for the full year rose 9.2%. New home sales, which will be reported Friday, have also been improving. Housing is finally contributing to the economy's growth instead of pulling it down, says Moody's Analytics chief economist Mark Zandi. He expects housing to contribute a fifth of the economy's growth this year. In 2009, remember the epicenter of disaster, it subtracted more than 1 percentage point from GDP. And this is the quote I like. Housing has historically led the US economy out of recessions. Plus 9.2% total sales, including single-family homes, condos and co-ops, were the highest since 2007. So there are far more buyers. Remember the point I told you about absorption? 11.5% change in median house price December compared to December 2011. The median existing home price for all housing types rose in December for the 10th straight month, friends. Minus 8.5%, the drop in the number of homes available for sale in December versus November. There is a 4.4 month supply of homes for sale at the current sales rate, lowest since May 2005. This market is improving. It's happened a lot quicker than I thought it would. To be honest, I thought it would still take years before it would improve. But it is really bouncing back, and it is bouncing back strongly on the back of low interest rates. This time round, when I got back from my 2013 visit, I was just astounded by how different the housing market was compared to when I first went over there. It's like being in an entirely different country. What about commercial property then? Well, this is the CCIM magazine, which is for commercial realtors. This is the front page of the January-February edition. It says 2013 forecast through the looking glass. The market outlook isn't half bad. So not only is residential property improving, commercial property is also improving as well. What does all this mean? Look, I'm just going to lay it on the table for you. I came back in 2009 and I started telling people this is an amazing opportunity. In 2010, I was telling people this is an amazing opportunity. In 2011, I said, look, guys, I think the opportunity is starting to run out. In 2012, I said, look, this boat is blowing its horn. It's about to leave dock. And here I am in 2013. And while you can mount a reasonable argument for continuing to do nothing, your procrastination is costing you money. I don't make any money by you buying real estate in the United States of America. But I have made I've seen this happen 3 times now. I've seen it happen in Australia, as I said. I've seen it happen in New Zealand. Now I've seen it happen in the United States of America. Who knows what's going to happen in the future? But every bone in my real estate body, having bought hundreds and hundreds of properties and invested all around the world, says that the US economy and the US property market is starting to roar back. And when the property market, like an escalator, starts going up, all you need to do is get on it and get carried higher. All right, so that's what I'm telling you here today. If you wait another 12 months, I think the opportunities that exist even now will have gone. So I wouldn't want you to miss out, and you've been forewarned, and forewarned is forearmed. It really guts me that I have conversations with people about the opportunity, and when the opportunity is over, that's when people want to buy. I just hope you won't make that same mistake. Everyone wants to buy tomorrow at yesterday's prices. It just does not work that way. So what's my 12-month forecast? Well, I believe that absorption will continue to tighten in the housing market in the US. I believe that sooner or later rents will start to increase. As rents start to increase, we will continue to get the price growth as more investors are attracted to the market. They start competing with homeowners. Construction will continue to pick up. At the moment, you can still buy property at a significant discount to replacement value, but as prices go up, what that means is that it will now start to make more sense to build rather than buy a second-hand property. That will be the real driver to construction. And then what will happen is that the residential, won't call it boom, but the residential uptick will flow into commercial property, as is starting to happen already. All right. Part 3, are there still opportunities? Well, let's have a look. What are the opportunities on offer for Australians investing in the United States of America? The first one is you can invest in tax liens. Tax liens are still a bona fide way of earning an income return. There is no capital growth, but the income return is attractive. As Oliver mentioned before, you do have to weigh up the currency risk though. But if you're buying tax liens in Florida, you can get 10% on the low side up to 18% on the high side without a whole lot of work. You can also invest in direct property, which is buying off the MLS, which is like the MLS stands for multi-listing system or service. So that's like the hub. It's like realestate.com.au if you like. It's like where all the realtors list their property. So you can buy off the listing, or alternatively you can buy foreclosure or tax deed auctions. Lastly, you can also invest in managed funds, either US managed funds. You can invest in them these days, or alternatively, you can invest in Australian managed funds that buy US real estate. Of course, the fund that I set up last year is an Australian fund created to buy US commercial real estate, including commercial residential real estate. Time permitting, I'll talk to you a little bit about that later on. What are the buying restrictions for Australians in the United States? And the answer is there is none. There is no problem with Australians going over and buying any kind of real estate they like in the United States. However, for ease of transaction, you are going to need the equivalent of a tax file number. The equivalent of a tax file number for individuals is called an ITIN, Individual Tax Identification Number, or an EIN, which is the Employer Identification Number. Even if you don't employ people, an EIN is like a tax file number for businesses and corporations. With that number, you'll be able to transact a whole lot more business. Unfortunately, the IRS towards the middle and end of last year made it harder for people to get an ITIN or an EIN. You can still do it, but it's just become a little bit harder. The other thing you need to think about when buying is you need to carefully consider how you are going to buy United States property. What structure you're going to use, and if you're going to buy direct property, I highly recommend that you don't use your own name or an Australian entity. I recommend that you use a US entity, and later on in tonight's webinar I'll give you a structure, which is my structure. You need to think about your capital. If you want to buy direct property in the United States of America, you really need $100,000 to $200,000 to make it worth your while. And the reason I say that is because it's going to be hard to borrow money in the first instance, and you're going to need to buy sort of the base level entry property in the United States now is $30,000 to $40,000, at least in Florida. And so you're going to want to buy 3 or 4 or 5 properties to make it worth your while. Otherwise, the amount of income that you get will simply be eaten up in compliance costs. So if you have a couple of $100,000 at your disposal, either you can borrow it against Australian assets, or you can sell other assets, maybe sell a property in Australia and reinvest your money in the US, then buying direct property in the United States of America is definitely an option. Even if you have less and you just want to get a foot in the door and you want to buy more over time, that is fine as well. You get away with $50,000 buy your first property as a starting point. But if you really want to make money out of this, you probably need over the course of the next 2 to 3 years at least a couple of $100,000 of money at your disposal to buy. But the real key when you buy United States property is not buying cheap property. I mean, anyone can buy cheap property. The real key to making money is having tight and good management. And I see people all the time buy properties that look good and look cheap, but because they don't have the management down pat in the United States, which is different time zone, other side of the world, different cultural aspects, that even though they've bought a cheap property, it still does not cash flow. So before buying, I recommend you get educated. Definitely visit the area. Even if you're buying tax liens, I still recommend worthwhile getting on the aeroplane, going over, taking a look. I mean, most people, I'm trying to find an analogy that would work here. Most people wouldn't marry someone without looking at them first or meeting up with them first. And it's like that with a property transaction. You're effectively marrying your money to a property deal. And I always say it's best to meet the person, meet the area, get to know the family before you marry your money to an investment opportunity. So whether you're buying direct property or whether you're buying tax liens, even if you're going to invest in a managed fund, if you are able to do so, it always pays to go and check it out. And indeed, as I said at the start of this seminar, in May this year, I'm opening up the opportunity for 40 Australian investors to join me in the United States of America so I can show them and teach them, both me and my team firsthand, how to make this work. I'm not a tour guide. I'm going over for the fund anyway, and I'm just piggybacking on the opportunity of bringing some people with me and giving them the adventure of a lifetime. So not only should you get educated, not only should you visit the area, not only should you talk with locals, but you need to build a network so that when you come back to Australia, you really are able to manage your managers rather than do the active investing, because you're not on the ground to do it, so you have to rely on the team around you. And one thing that I would say, be very careful when buying property off people who are selling you solutions. Lots of organisations these days sell property to Australian investors or sell United States property to Australian investors. I'll give you some more warnings about this in a second, but I just say be very, very careful, because the further you are away from the problem, the further you are away from the profit. All too often I've seen these organisations selling overpriced property to Australians, which could have been bought a lot cheaper had they just gone over under their own steam. So what are the upside benefits of investing in the United States? The income returns I've talked about are superior to Australia. The growth returns, I believe, are going to be superior to Australia over the next few years. If the Australian dollar falls, then you'll make further gains. It's a diversification or hedge. As the economy in the US improves, the dollar should improve, or if the economy in Australia deteriorates, the US dollar should improve and the Australian dollar devalues. So it's a natural hedge that you could put against Australian real estate. Indeed, if we look at the Aussie dollar for a second here, this is what's happened since 2009. Global financial crisis, Australian dollar fell from about 95 cents down to 65 cents. All right, then it started its long climb up, and now we're sitting at around $1.04 US cents. So it's not the high at $1.10 that it was midway through 2011. But still, compared to where it was in 2009, you still have tremendous buying power. So house prices, what to expect. This is not an earnings estimate. This is my gut feel about residential property and what's going to happen. Income, you can sort of expect a gross 10 to 20% return after cost, between 5 on the very low side up to 15%. Appreciation growth, 25% to 20% plus, I don't think is unreasonable depending on what you buy and where you buy. You may even be able to get 50 to 100% growth depending on what you buy, where you buy, and what you do with it. And the big thing is your ability to borrow money in the United States is also gradually thawing. Back in 2009, it was hard enough for a US citizen to get any money, let alone a foreigner. Now what we're finding is some of the local banks are thawing to the point of entertaining the idea of lending foreigners money on low LVRs, 50 to 60%, provided they've got good cash flow in the property and that they've owned the property for a few months. So there is definitely a strategy on offer now where you can buy a property, all going well, refinance it after 3 months of results, pull your money back, and then go again. Your ability to leverage in US dollars will be a natural hedge against any currency movement. So the thawing of the finance market in America is improving every day. What are the downside risks? I saw that this was one of the questions that someone asked before. Of course, investing is about managing the upside and the downside and making sure that the upside is sufficiently high enough compared to the downside to justify the risk. So the risks of investing in the United States are as follows. The first one is the currency exposure. You'll be investing in United States dollars. If the Australian dollar were to appreciate against the US dollar, then regardless of how your property portfolio goes, you would lose money. If the Australian dollar was to depreciate against the US dollar, then however your property performed, the currency going down would make money. It is a capital-intensive exercise to invest in the United States because it is so difficult to borrow, as I've said. There are the normal housing risks associated with property, such as damage to the building, tenant problems, vacancies, management, which is another point I'll come to in a second. These are all just inherent risks when you invest in real estate. Changes to laws, tax, etc. The biggest risk, though, aside from the currency, is what I call the management dilemma. All too often, people will race off and buy what they think is a cheap property or a property that looks good on paper, but they don't have a management solution. And when you are on the other side of the world, your ability to manage this asset effectively is so critical. Good management is more important than a good property. And your job needs to be to build a network rather than just think that you buy real estate. The other thing you need to be aware of on downside risks is the compliance complexity and costs both in Australia and overseas when you start becoming an international investor. You'll have to put in a tax return in the US, you'll have to find an accountant here in Australia which knows what he or she is doing. You'll probably need an Australian attorney, a US attorney. All this starts to cost money and that needs to be paid for out of the returns from real estate. Have I put you off yet? If not, let me just spend a minute now talking about third-party sellers. And you need to be very careful. These are the guys who market US property to Australians. The reason why you need to be very careful is that this property is often highly overpriced. After all, these guys have to make money somehow. And because it's overpriced, if you were to go there under your own steam, you'd probably be able to make a better deal of it if you can get a solution to the US management. Sometimes these third-party sellers offer property with finance and management, which is all well and good and sounds like you've got all the bases covered up until something goes wrong, the management doesn't perform and you need to sack them. What option have you got? If you haven't been to the area and had a look, you really are in the dark. And if you are investing tens of thousands of dollars, as you would be, I think it is a ridiculous proposition, let me be clear, complete foolishness to buy a property without ever having gone and seen the area and gone and spent some time on the ground yourself. If you do that, if you go and buy property in another country, even if you go and buy property in another state, and you have not spent time on the ground, you are setting yourself up for significant failure. You also need to be mindful of who is your Australian support team so that if something does go wrong, you've got someone to turn to. And as I said, it is vitally important that you go and visit the area in person. All right, so it's time now to showcase some of the deals that came across my path when I was over there in the United States of America. Now, I said at the start of the webinar that I am more excited now than I've ever been at any time during my real estate career. And the reason for that is when I started investing in 2009 in the US, it was very exciting, but there was doubt about what was going to happen to the property market. Now we have more certainty as to the support and the viability and the strength of the property market. So what I want to try and do now is, before the door slams shut on the opportunity altogether, I want to just try and get in there and make that last little bit of money at all costs. And so whereas before I had doubt, now those doubts that I had about the strength of the US economy and the strength of the US property market are gone. If anything, the fear and the doubt I have now is that the opportunity won't be open for long enough for me to take full and total advantage of it. But to show you that there is still opportunity there, I'm going to share with you 3 deals right now. The first deal is a deal that I bought for myself in partnership with Tommy Senator, my US business partner. It's a really basic duplex. Here's a picture of it. I wonder, you tell me, what do you think about this property that you are seeing on your screen right now? I wonder if you could describe it for me. What do you see? You see I'm waiting for your comments. Type them in. What do you see? Does it look nice? Does it look ugly? Can you remember the first duplex that I ever bought compared to this one? Come on, type in your comments. Looks nice, says Alex. Thank you, Alex, for contributing. Clean, neat and tidy. Looks like a shop, says Ben. Basic functional living, says Marky Butler. Good to see you on mine, Marky. Hope your back's okay. Looks white and nice. That rhymed. Well done. Entry level looks good. All right, so this is really, it's a bit better than an entry level duplex. This is concrete block construction, concrete floor. The worst thing about this property is that it's under this big, massive tree here. This is Alex. Say hi, Alex. Hi, Alex. Alex is the guy who does my property inspections. He's actually a builder. You can see here that there's a big central air conditioning unit just over here, which is ducted in. And if you look really carefully, here's the first door. This front one is empty, and this is the back unit. What you don't see over this side is another duplex. This is the nicer looking duplex here. And a little, they call them lanai, enclosed porch. The reason why it's enclosed is because of the bugs. Now, oh, what's the ROI, says Leo. Of course, you want to know, and I'm going to tell you. Now, do you remember me saying that I bought the very first duplex in 2009 for $12,500, and we spent about another $12,700 doing it up? What do you think this property was bought for? Type in your answer now and I'll read them out. How much would you pay for a duplex in Australia, I wonder? And what do you think this is? Laura says 40, Rachel 22, 12,500, 25, 28, 30, 40, 40, 33. All right, you guys are all living in yesterday. Those prices existed in 2009, maybe 2010. They do not exist in 2011, 2012 or 2013. The market has bounced that much. And this is where, again, all I can do is smack my head and say, I told you. I don't feel great being self-righteous, but I'm just sick of telling people about opportunities and they miss them time and time and time and time again. It's just such a pity because people are their own worst enemies. If only they would back their judgment, they would actually move ahead rather than being stuck still. So this little duplex in Fort Myers was advertised for $59,900. It was advertised as a 4-bed, 4-bathroom, which would be 2-bed, 2-bath on each side. It's on a 6,490 square foot lot, which roughly translates to about 650 square meters. The house is 174 square foot, which is roughly 1,744 square foot, which is roughly 174 square meters. So now you know what they're asking for it. I wonder, what do you think I paid? All right. This property, a few more details. Again, this is where 4-bedroom, 2-bathroom, built in 1959. I will say that what I found out was that there was a lot of plumbing done to the property, and it had a new roof put on it, which is always important because roofing in Fort Myers is pretty expensive. So, Bob says $10,000. Bob, and you're dreaming. I'm here to tell you, $10,000. I'm good, but I'm not that good. You can see the person I bought it off paid $25,900 in 2010, January 2010. Les says 52. Mark says 65. It would be a steal at those prices, guys. The property tax value is $23,298. Now you've got to be careful here because for property tax purposes, the return, they're still way back at 2009 prices. The property appraiser is an elected position. They win no friends by overvaluing property despite what it looks nice on paper. So yeah, it's a false signal to look at these property values now. That's looking a bit old. Lee says 65 grand. Daniel says 75 grand. Well, at the peak of the market, this property was worth over $130,000. So you can see how far it rose and then how far it fell back down. Look, I'm going to put you out of your misery and tell you what I bought it for. But before I do, I'm going to tell you how I came across this property because it was highly unusual. If you look at this picture, way out in the background there, you can see another property. That's on the other side of the road. Then there is a vacant lot out the back here, and then there is this duplex. I was actually attracted to this property on the other side of the road and evaluating it for the fund. Turned around and saw a little for sale placard out the front of this vacant property, and I thought it was for this duplex that was up for sale. Turns out that it wasn't. It was for the vacant block of land. But a complete stroke of fluke and luck, this duplex had been for sale on the MLS and had become an expired listing. So I rang up and I said, what's with the duplex? And the person whose sign it was over here had no idea what I was talking about because they were selling the vacant block of land. So I jumped on the property appraiser website, found out what the address of this property was, did a search just on Google, and it turns out it was for sale. So it's just one of those things, you know, a deal leads to a deal leads to a deal. Sometimes that's how properties are found. But are you ready? I'm going to put you out of your misery right now. What is the property appraiser website? I'm happy to share that with you. Laura is LEPA, www.leepa.org, I believe. Purchase price, $40,000, cash, 14-day closing. So I came in there at $40,000. Alex told me I'm going to have to spend $7,000 in initial repairs. I need to paint this front unit. These windows need a bit of attention and some odds and sods around the place. And $500 for closing costs means I can buy a duplex for $48,000, which means each side $24,000. I am here to tell you that is an absolute steal. Bob says I was ripped off. Bob, if you can find a better deal anywhere in Fort Myers, I am going to say well done, because I'm here to tell you this is about as good as it gets in the US market right now. The rent would be $1,000. The back unit here is rented already, $500 per week. When I did the inspection, walked in there, 4 young African-American guys with massive TV screen playing some computer game where they've all got guns. Pitch black inside, typical man cave, very funny I thought, and the front had been vacant, but at $500 it'll rent up pretty easy. Minus management cost $960, minus taxes $950, minus insurance $850, minus maintenance, put in $500 per annum, leaves you with $8,740. $8,740 divided by 48, which is the in price, leaves you with a lazy cash-on-cash return of 18.2%. I'm pretty happy with that. Good luck trying to find anything like that in Australia. I wonder, what do you think the cheapest duplex you could buy anywhere in Australia would be? And I'm pretty sure it wouldn't be 40 grand in an area where 250 to 300,000 people live. That is the difference between buying in America and buying in Australia. All right, that's deal number 1. What do you reckon? High five, team? Woohoo! Well done. That's 1 down. All right, so now that's one that I bought for myself. And to be honest, it fell in my lap. Sometimes you get lucky. You have to be in the market. The more you work the market, the more deals you'll find. Would have been impossible to find that deal from Australia. That's why, again, the best deals happen when you are on the ground, not buying them remotely. If you can do tax liens remotely, no worries at all. If you want to be a property investor in the United States, you want to buy direct property, you're going to have to spend some time on the ground to get to know what's going on. You can build a buyer's network, but you need to invest the time on the ground up front to know what's going on. All right, high five. Thanks, Rach. Thanks, Giovanni. High 10, big fella. Good on you, Bob. 2 thumbs up for you. Happy now. Pretty happy. Well done. All right, thanks for the high five, Alex. Good job, team. All right, so this is real deal number 2, twice the fun, twice the return. We'll have to wait and see. This is a commercial cash cow. So for those of you who have invested in my property fund, here's how I want to spend your money, or our money as the case may be. Now, it's been my experience over the years that often ugly properties provide the best returns. I want you to look carefully at this picture and tell me what you see. I'm going to give you a couple of minutes to study it very closely. As I sip this drink of water, type in your response. Tony says a tin shed. Well done, Tony. Look carefully. Thriving business, says Brenton. Cars, says Ian. Ugly drug dealer's front, says Rachel. You're obviously a glass half empty kind of girl. Good for you. Mechanics, auto electricians, workshop. Potential, says Alison. A beautiful yellow Corvette. Well done. 10 businesses. Factories. All right, good. What I see when I went and saw this property was cars. All right. I got to thinking, why on earth are there so many cars here? But perhaps I should tell you how I found this property. Right. I'll tell you the down and dirty details. Here's how. I got on my push bike. Well, it's not my push bike. It was actually Stu Silver's push bike. I was staying with Stu Silver and I went for a bike ride. And as I was out for a bike ride, they've got a nice little bike track, I came across a old realtor's board that had the word available on it. And I thought, I was out the front of some warehouses in the industrial area, and I thought that'd be interesting. Wasn't this property? And so I remembered the name of the website for that realtor, rode back to Stu's later on, lay on the bed with my laptop, called up the realtor's website and looked at the listings they had for sale. And this was one of the listings that they had for sale, which was not actually available on loopnet.com, which is the commercial realtors site over there in the United States. So again, this is just one of those stories about sometimes when you're in the market and you're looking in the market, you'll find a deal. When you're not in the market, when your head's down and you're ignorant of such things, as many of you have been over the last 3 years, just come up for air when I do my property market updates, you miss the boat altogether. So this is a property that we've got under contract for the fund. There is actually a first right of refusal for the guys who operate the phone tower out the back, which you can't quite see. It's just to the right of the picture there. Let me show you an aerial photo. So it is actually 22 single units with some land out the side here. Looking carefully at the properties here, the property next door here, you'll see that it is a car yard. And what happened with this property is that as the US came into the Great Recession, as they called it, instead of people buying new cars, they had to get their cars serviced. So a whole industry sprang up around affordable car servicing. And that's what this basically entire site is used for, a whole lot of different car service businesses where there are cheap second-hand parts next door. For property tax purposes, $281,791. All right, so I wonder. We can't see. Yes, we can. It is 98,000 square feet, which is roughly 9,800 square meters. So it is a very large block of land. 22,200, roughly 2,200 square meters of warehousing on it, built in 1981. If we look at the value of this property, you can see that at the peak of the market, it was worth nearly $900,000. Remember, that's for property tax purposes. It was probably worth 1.5, nearly $2 million at the peak of the market, and then it crashed down to where it is today at around $300,000, remembering that that is artificially low. It was sold in 1999 for $650,000. So the person who bought this had a gold mine, went all the way up, and then went all the way down again. This is the rent roll of the property, and you can see here the number of different units. There are 22 of them, plus the rear storage yard, and there's also a billboard which is being let for $333. Total rent, $107,000. Take off operating expenses, taxes, insurance, utilities, repairs, miscellaneous, $17,296, gives you $89,723 of income per annum. Righto, over to you. How much would you pay for a warehouse complex with 22 units in it, delivering $89,000 per annum? I'll give you a hint. If you were buying at a 10% return, you would be happy to pay $890,000. Over to you. Tony says 350. Would that be your deposit, Tony? 450 says Tammy. It's better, but it's not heading the right way. 600, 500, 500. Guys, if this property was in Australia, you'd be paying $1.5 to $2 million for it. 890 says Tim. Righto, now we're starting to get more realistic. 317, 299. Well done, Bob. I always like 480. Wow, I think it would be higher, but I am not sure. If in Australia, maybe 2 mil. That's right, Rach. All right. Well, the NOI of 89,723. The contract price, $600,000. Just imagine the replacement cost of trying to build 22 brand new little mini warehouses. You wouldn't build it for $600,000. You wouldn't build it for anywhere close to that. All right, so Sharon's giving me a yippee because our cash-on-cash return is 14.95%. So I want you to tell me, out of 10, how excited are you by this deal? Put it in there. Go on, let's be honest. How excited are you? Rach says a 10. Steve says a 10. Hang on, 12s. 14.95%, guys. Tony says 4. Sorry, Tony, you're a hard taskmaster. You wouldn't be happy with a 14.95% return here in Australia. Mark says 9.999. Very good. All right. Daniel says 9. Always room to improve. I can see your parents were never happy with an A mark for you, Daniel. They always wanted A+. Very good. I think we can do better. Do you have any idea how I think we can do better? What do you think? You tell me. Can we do better? How can we do better? Well done, Steve-O. Vendor finance or vendor carryback. What we agreed to do was to negotiate with the owner to carry back 40% of the purchase price as a vendor carryback at 5% interest with a balloon after 5 years. So here's what happens. First of all, our NOI goes down to $77,000 because now we've got to pay interest, right? But the amount of cash down we need goes down from $600 down to $360,000. And our return goes up to 21.59%. What do you reckon now? I'm waiting to see your response. Sweet, love it. 14 out of 10, righto. Now we're starting to see. So these are where ugly properties can really deliver good bang for buck. Now this is under contract for the fund. I hope we're able to get it. As I said, there is a first right of refusal though for the people that own the phone tower out the back, which is not part of the property. Hopefully they will say no, they're not interested, and we'll be able to pick up this ugly duckling high positive cash flow property for the fund. Obviously there's due diligence that needs to happen too to make sure that we don't end up buying a dud. Can you see the excitement? Can you see the opportunity? I feel happiest and best when I'm out there putting property deals together. And for those of you guys who have backed my judgment, backed my trust in the fund, it is so pleasing to be able to do this, not only for me, but for you too. And I realize those of you who are in the fund took a risk, and it's now my job to work as hard as I possibly can to repay your trust in the form of monetary gain for you. So let's move on to the third deal. And if you thought the first deal was good, well, I thought it was good too. If you thought the second deal was good, I thought it was better. I'm here to show you an even better deal, but maybe not for reasons that are obvious first glance. I want you to look at this building and I want you to compare it to the other two, and I want you to tell me, what do you see? Look very carefully. More expensive, says Tammy. Nice and new. Is this for the property fund? Palm trees, offices, Bunnings. Looks newer. Big warehouse, more modern. All right. Yes, all of the above except Bunnings. This is, well, maybe it's probably better if I show you it from the aerial. It's actually 3 different spaces under the one roof. I haven't put too many photos in here right now, but if we look at a floor plan, you'll see that it is 3 buildings, 4,200 square foot, 11,250 square foot, 8,400 square foot. 2 of the spaces are leased, 1 is available. Now, I'm just going to come up to this picture again, and I want you to speculate how much you think it would cost to build that property from new today, including the paved lot, the slab, the concrete block construction sides, the lighting. Okay, 5 mil, I reckon it would be 4.5 mil, 1.8. No, 1.8 is too low. I reckon this is probably a $2.5 to $3 million spend at the absolute minimum. So this is the idea or the notion of replacement cost. So if you could buy an asset at a vastly reduced cost to replacement cost, then there is intrinsic value in a building like this as and when the market recovers. So I'm going to show you a spreadsheet right now. And tenant 1 is paying $96,000 a year to rent the space. Tenant 2 is paying $27,000 a year. Total rent $124,000. We've got some vacant space, which isn't. This is as is. Take off taxes, insurance, and landscaping. Total expenses $28,365. NOI of $95,000. We have it under contract for $1.15 million. So just remember that against replacement cost, which gives us an as-is return of 8.34%. Now, who is excited by 8.34%? Probably not many of you out there. How can we make this deal better is a question that I constantly ask myself. Well, we negotiated owner finance like we did in the last property. 40%. Why 40%? Because that's the maximum threshold we allowed in the fund. We have 124 in income. Take off now the expenses including interest, 5%, which means our NOI goes down to 72, but the amount of cash we need in the deal now goes down to 690, which gives us 10.56% as is under finance. Who's happy about a commercial property that gives you a 10% return or 10.5% return? Leo asks what interest rate. You can see here, mate, 5% interest. Yep, good so far, says Julie. Previous sales prices of the property. Yep, I am. Happy days are here. Yep, all good. Michael says he's happy, but he wants more. Well, what's the obvious more, Michael? The obvious more is what happens when we rent up the vacant space. All right, so now if we look at these numbers again at max rent, and if we just assume $6.86 a square foot, which means an extra $57,000 a year, our current rent, our as-is NOI goes up to 13.35%, and our financed cap rate goes up to 18.91%, and that is at discounted rates. So if we're able to get the property fully rented, and if we're able to get a great income return, this is the sort of property that if we could buy, I would buy every day of the week in the fund, because it's a good quality building, it is good quality cash flow to good quality tenants, and that as and when the market improves, buildings like this are going to appreciate tremendously in value. So there you go. Now I've shown you 3 deals. I've shown you a little one, which is what's possible for mum and dad investors. And I've shown you 2 bigger deals of the sorts of properties that I want to seed in the fund. I haven't even told you about the property, which is 207 units, which I want to buy on a 10-year lease back to the person selling it, who has a contract with the state where this property is at to house people who are just out of jail in an integration program for the community. And that would be the most phenomenal deal I've ever seen in my whole life, by a margin that is not worth measuring. It would be so great. So fingers crossed that we can pull this kind of stuff off. There's a team, myself, Aaron Dunlop, Stu Silver, Tommy Senator. We are working around the clock, literally, to find these great deals and to put them into the fund. So exciting times, friends. All right. Part 5, how do you get involved? So hopefully you've caught the enthusiasm that I feel, the tremendous opportunity that is investing in the United States of America. Guys, like I said, when I started in 2009, there was a lot of doubt about the future of the property market. That doubt is gone at the sacrifice of those crazy yields, but I've shown you can still get really healthy and impressive returns with the growth upside going forward. So in regards to the passive income fund, I've seen many of you asking your questions. Unfortunately, it is closed. You cannot put more money in if you're already in. You cannot put money in if you're not in. I hope to reopen it again in June. I am now in buying mode. I am not in capital raising mode. We raised $28 million. I want to place that money in the market, particularly while the going's good, before we come back for more equity. However, you can register your interest now at PropertyInvesting.com fund, and I will give you the first opportunity to invest when it reopens, and I will do my best to try and give you a discount on the contribution fee. It will not be as generous as what was offered to the people coming in on the first entry though. So if you want to find out about it and you want to get the discount on the contribution fee, then yes, you will need to register your interest. I cannot guarantee when the fund is going to reopen. It may not reopen again this year at all. It all depends on how quickly I can put the money in. That said, I am hoping to reopen it again in June. So in the absence of being able to invest in the fund that I set up, and congratulations on those people that did jump in, you were on a good thing. And it's just my hope that in time you see what a good thing it is. Thank you to those people in particular who backed me with significant amounts of money. Trust me, I am working long and hard to repay your trust. So step number one, if you want to take advantage of the situation in the United States of America before it's slam shut and it's over for good. Oh my gosh, what are we going to do? All right, if you want to get educated, what you need to do is you need to pick up my USA Property Power Pack. This is not a sales gimmick. I have literally one left. I had 8 left when I did this afternoon's webinar. I only have 1 left now. Once that's sold, I do hope to relaunch the product as an e-product, but if you want the hard version of the product, I'm down to my lucky last. So if you want to get a hold of the Property Power Pack, there aren't 8 left anymore. Jace sent me a message before. There's only 1 left. First in, best dressed. It's normally $4.95. I'm happy for you to have it for $2.95. Just go to the online store now and pick it up. First in, best dressed. Step number 2 is you can come to the United States with me and see it for yourself. We'll spend a week, myself, Tommy Senator, and our expert team showing you around and training you on how to take advantage of this literal once-in-a-lifetime opportunity, which is ending very quickly, team. It's the 2013 Tour of Duty. I was only going to do one Tour of Duty, which was last year. I've decided to do another one this year because we're doing it in May, and I am including a live tax lien auction. Something that I've always wanted to go and do is go to a tax lien auction live, and I figured I'd bring 40 of my new best friends with me as well. So if you would like an experience of a lifetime, something truly special, something you'll never ever forget, sort of buying property on the courtroom steps, going into a room and watching these tax liens get sold, plus you want to go and buy direct property, go and figure out what's going on, or you're investing in the fund, you want to see what I'm doing and you want to rub shoulders with me for a week, just imagine what's possible hanging out with me for a week. Then this is the opportunity you've been looking for. It's a guided tour and a chance for you to meet my US team. It is only for 40 people. I'm not looking to run heaps of these. Honestly, I don't have to. It's not worth my while monetarily to run it. I could make far more money running seminars here in Australia. It's just that I'm going to be over there for the fun, and I want to open up an opportunity for a select group of people. What I've found is the participants that come on seminars such as this build lifelong friendships, not only with me, but with the other people on board as well. It really is a truly unique experience for those of you who want to take advantage of it. It's going to be Monday the 27th of May through to Tuesday the 4th of June 2013. We bought a big bus and we travel around. Here's a picture out of the front window. If you look carefully, it says USA Tour of Investing Duty. They really do drive on the other side of the road in the United States. You'll get to see things like you've never seen before, and some of you may never want to see again. This is a mobile home crawling through one of the mobile home parks. There's Mary, there's Cole, a whole bunch of people here, which well, I know by name now and go out of my way to help. There's Stu Silver. Not only will you see things, you'll hear incredible things. you'll see deals go down live, and you'll build some lifelong friendships along the way. This is Hanuman here in the middle. He's only 14, I think, and his dad Pete took him along for the tour as well. So that was really fantastic. What an incredible bunch of friendly Australians. Good to see you down here, Rich and Mike, Steve-O. There's Tommy down there, Jane. Good to see you, Jane. Hope you're well. All right, Monica, Tanya, lots of friends there. So what you'll get, amazing life-changing experiences. You'll get to see, feel and smell real-life investing, and I guarantee you'll be able to super accelerate your understanding. Quickly, on the 27th of May, we meet in Orlando at 6 p.m. for pre-event drinks and nibbles. You'll get a welcome pack, which includes a mobile phone, and we'll do our first debrief about what you can expect. You'll also have a chance to meet your fellow participants. On Tuesday, the 28th of May, we go from Orlando, drive down to Fort Myers. It's our first field trip. We'll stop off at a mobile home park, plus go past some of the commercial property that we have bought in the property fund so you can see and feel it real life. Wednesday the 29th of May will be our second field trip in and around the Fort Myers area. You'll see property that Tommy and I have bought from 2009, 10, 11, 12 and even 2013. You'll get to meet the team. You'll get to meet my US attorney, my US accountant and also my US banker. Thursday the 30th of May is a training day. We'll spend the whole day talking about tax liens and direct property. It won't just be theory though. We'll take a look at what's actually for sale and put it through its paces. It's theory meets practice in the real life, in real time. Friday the 31st of May is our fourth field trip. That's when we board the bus and go to Collier County for their live tax lien auction. They don't do it online. They do it old school. Everyone gets a gun and we shoot each other. No, really. What happens is we go to Collier County and we watch a live tax lien auction, and I'm planning on buying some, and there'll be some of you who want to do it as well. You'll get to meet the team, part two, which is the management team over there in the US and also further advisors, insurers, title company, etc. On Saturday is our fifth field trip in and around the Fort Myers area, looking at some hand-picked properties with a realtor. I'll also get my property inspector there to have a talk to you about the way the properties are built in Florida and the sorts of things you need to look out for. I'm going to really sew into you so you become an area expert. You'll also do many hours of supervised deal spotting with Tommy and me and our team there at your back to help you out. Sunday you've got two options. Option number one is to come with Stu and me on a commercial property bus tour. That is free for people who've invested in the fund, or it's a slight additional charge for those of you who haven't. Otherwise, option two is to do a whole day of supervised deal spotting with Tommy Senator, and then we leave into our last day, which is Monday the 3rd of June. In the morning we do tax deed training, in the afternoon supervised deal spotting, and in the evening we finish up with a celebration dinner. For those of you who want to hang on an extra day, Tuesday the 4th of June is an optional free extra where you can meet in Tommy's office in the morning and watch the live online Lee County tax deed auction. Remembering a tax deed is a tax lien that has gone into foreclosure and is being auctioned. It hasn't been redeemed. So that's a quick syntax of what's on offer. Hopefully I haven't bored you to death. What's included is a welcome pack, all the training, all the bus tours. We obviously have to pay the experts to be there to advise you. Celebration dinner is included, and a lifetime of experiences and memories you'll never forget. Your cost, you have to pay for the tour. You have to get yourself there, so you have to pay flight and accommodation. You have to pay for your meals, except for the celebratory dinner. You have to pay travel insurance and obviously incidentals. You also need to make sure you've got the right visa to enter the United States of America. Now, when Tommy was running his I think it was 2 days, no, it might have been 3-day training in 2009, attendees paid $15,000, and that didn't include the guided tour. So my discounted price, which I'd like to offer you for the personal guided tour and 7 days of fantastic training, limited to 40 people with the guest experts and advisor, is 50% of what Tommy charged originally, which is $7,500 per person. Now that's the base price. Here's what I can do as my best price. $5,995, bare bones, and I believe that is an absolutely incredible price when you consider what's on offer. It is an unbelievable deal. What I am doing though is I am offering a 24-hour launch special for the 2013 tour. Here's how it works. From 10 a.m. this Wednesday, the 6th of February, to 10 a.m. Thursday, the 7th of February, I'm going to knock off a further $1,000, which means the launch price is only $4,995. And you really should be sending me a thank you card. I don't want to sound conceited or anything else like that. That really is an incredible deal. Bear in mind, guys, over 1,000 people have registered to either attend this seminar, this webinar live, or watch a recording of it. Out of those 1,000 people, I would be absolutely astonished if I couldn't sell 40 spots at $7,995. So to offer it at $5,995, I think is a slam dunk. To take an extra $1,000 off, I'm doing as a token of my appreciation. To say, I want to try and do a really good deal for you. Now, here's the deal, guys. For those 85 people who are online right now watching this, you guys can jump the queue. You don't have to wait till 10 a.m. Wednesday, the 6th of February to book in. To reward you for being online now and live, if you want to call up the office, you can call up on 03 8892 3800. You can call right now. Jace is here in the office. And you can book your spot to attend, and thereby to reward you for being online, get a guaranteed spot before the rush on Wednesday, the 6th of February. Bear in mind, last time I did a tour of duty, it sold out within 20 minutes of it being launched. So being able to give you the chance to jump to the top of the queue is a special privilege. If you want more information about the tour, PropertyInvesting.com/Tour of Duty 2013 is where you need to go. All right, as we start to wind down our webinar, I have a Q&A period for you. I've come up with 10 questions, and then I'm going to try and go back over to my screen over here and do my best to answer any other questions that have been asked. Question number 1. Can I legally buy US property even if I am a non-resident? The answer is yes, you can. There are no restrictions stopping you. However, in order to comply with the system, you're going to need an ITIN or an EIN. So it always pays to have those things. Question number 2, can I borrow money in the US? The answer is you can. You're going to find it hard when borrowing from traditional lenders though, and also hard money lenders is an option for you, but the easiest way in the short term is going to be vendor carryback, then hard money lenders, then traditional lenders. Question number 3, where should I buy? Well, you've got an option. You can buy in Fort Myers or you can buy in other US hotspots. It's up to you to do your research to find where you'd like to buy. Question number 4, who will manage my properties? That's up to you to figure out. If you buy in Southwest Florida, you can use Bayliner. Otherwise, you can go with another property manager. Just make sure you do your due diligence up front. Question number 5, how do I send money over to the US and bring it back? Now, look, there are a variety of options. You can use a bank if you have a relationship with a bank. Personally, I highly recommend using OzForex. Just make sure when you set up an account with OzForex, you tell them to link it to the PropertyInvesting.com account. They will give you an even better rate and they won't charge you any fees whatsoever. Question number 6, how should I structure my US assets? You could do it in your own name, but I highly recommend against it. I recommend that you do it in an LLC. Here's how I did it. Trustee of an Australian family trust with a US LLC. So there's a loan between the family trust in Australia and the US LLC. The US LLC owns the property. The profits go back to the LLC. The LLC has loaned money from the Australian trust, so it pays interests, and the profits end up in the hands of the trustee of the Australian family trust. Question 7, what are the tax implications? Well, first of all, you're going to make profits. You're going to make profits in the US and you're going to make profits that are going to flow back to Australia. You're going to have interest that's going to be paid in the US and received in Australia. Basically, you are going to be taxed on your profits in the US and you are going to get a foreign tax credit for those profits back in Australia. Question 8, would the tour of duty be tax deductible? The answer is, come back to that one. Would it be tax deductible? If you have already invested in the fund, then yes, I believe that a trip over would qualify as a tax deduction, but it's always worth getting your own advice. Point number 2, if you invest in Australian property here already and you're going over to the United States of America, I believe there is a strong argument to claim a tax deduction for the trip. If you have not yet bought any Australian property or US property, I think it's going to be a hard ask to get a tax deduction for the trip. So by all means, go and talk to your accountant. This is not tax advice. It is just speaking generally. Question 9, can I invest via my self-managed super fund in US property or tax liens? The answer is yes, you can by all means. It's just very difficult. I reckon that you may be better off for simplicity considering whether the passive income fund that I have set up when it reopens may be more suitable for you without giving you investment advice. Seek advice. Question 10, should I invest in direct property or should I invest via your property fund? It all depends what you're looking for. I hope that, that you do take advantage of investing in the United States of America, whichever way you look at it. So webinar summary, event summary. The US market is now recovering, friends. There's no doubt about it. I've seen it firsthand a number of times now. It's now a growth and income play, and time is running out for you to take advantage of it. Don't miss the boat, whatever you do. Otherwise, you'll have regrets. Like you probably have regrets that you didn't buy more property in Australia 10 years ago, or you didn't buy more property in the US 3 years ago. Tour of Duty 2013. It's the opportunity of a lifetime. Spend 7 days with me and my investing team. Get a guided tour, expert tuition and one-on-one help, and build your own positive cash flow property portfolio while you can. We are down, as I understand it now, to about 30 spots left. 10 spots were taken at the lunchtime seminar. You guys tonight have an opportunity to jump on board if you want to. Jace will be here now for another half an hour or so as I wrap up Q&A. By all means, jump on the phones, ask Jace to reserve a spot for you. You have an opportunity here right now to avoid the rush. I urge you to take it. I do not believe there's going to be any problem whatsoever in it selling out with 1,000 people registering their interest to find out what's going on in the US. 2013 Tour of Duty, there is the website, PropertyInvesting.com/TOD 2013. Or you can call the office right now, 0388923800 if you are listening live. All right, that's me done. I am now going to go over to the Q&A questions that have come in on the webinar. And I'm going to start on the bottom and work my way up. Thanks for tonight, Steve. See you on Saturday. Good on you, Brenton. Do you fly direct to Orlando or to the West Coast? Brendan, you would need to fly to LA, or San Fran, out of Sydney, and then fly across to Orlando. That's how you'd get there. You can also fly Sydney to Dallas, and then Dallas over to Orlando. If the tax lien expires and you get stuck with the property, or get stuck with the house, do you have to pay all the backdated taxes? No, you do not. Steve, you've effectively paid the backdated taxes when you acquired the tax lien. When it comes to foreclosure, in order to foreclose, to bring the property to auction, you have to pay out the outstanding taxes from all the other tax lien holders. If the tax lien expires, there we go, we're asking that again. Can you advise of some of the websites you regularly use in the USA to do your research? That's all covered in the Property Power Pack, Laura, so I suggest that you get a hold of it. Leo wants to know how many properties have you bought? For myself, if we include the mobile homes, a couple of hundred. For the fund, we have none bought as yet, but we have, I think, 5 or 7 properties under contract we're doing the due diligence on. I am going to see if my husband will go. Come on, Rach. Women's liberation. I hope you're able to make it. It'd be fantastic to have you over there and join aboard. Hi, Steve. At what point did you say to yourself, hey, I see an opportunity in the US? I did not see the opportunity until I really went over there in 2009 and really saw these properties and how high they were yielding and could not, Tammy, believe why more people weren't buying them up. And I tried to buy as much as I could. I had a lot of doubt. I had a lot of fear, probably like you guys listening to this have right now, about, there's all these things that can go wrong. Those doubts and those fear, they never go away, whether you've bought one property, no properties, or 500 properties. What you need to do in order to be a sophisticated investor is to transfer that doubt into real life action. You need to get over there and see what's going on. And that's why, dare I say it, the tour of duty could be so beneficial. Les wants to know if we're going back to the crab bar. Les, yes. Celebration dinner will be at the Joe's Crab Shack. Well done. I really wish I could go. It's an amazing offer. My loss. Sorry, Sharon. Next time, if there is one. Otherwise, you'll have to deal with pictures. Oh, my goodness. If I could go, good luck. Whoever goes will seriously benefit, and the price is so low. I'm glad you appreciate that, Rach. Sorry you can't come. When is the Disneyland tour? Bob, by all means, you can do the Disneyland tour beforehand if you like. I, for one, have done it with my kids a couple of years ago. I am in no hurry to go back to Mickey Ratland. Would so love to go. My daughter has just started prep and I have my own business. Never mind, Rach. Thanks for setting up this evening session. Was quite gutted when I missed this afternoon's session. No worries, Tony. Hopefully you got good value out of it for your time. Be bold, be different, be first. I think the saying is be daring, be different, be first. But that's good, Brendan. All right. You're welcome, Leo, for tonight. For those of you who've invested in the property fund, I am angling for our first unit holder meeting to be in April. I just need to look at dates, and I'll give you as much info and as much notice as I can. Steve, I've done Tommy's training in Florida in 2011. Would the tour of duty be any different and or still be beneficially for me? I'd really like to go on the tour to see all the properties. Well, look, Daniel, honestly, if you're planning on going back to the United States of America, $4,995 for 7 days worth of training, I believe will be well and truly worth it. Yes, some of it will be repeat for you, but there'll be a whole lot that is not, and it'll be a chance for us to get to know each other better and to consolidate. Can you make the unit holder fund meeting the same weekend as the apprentice weekend? Brendan from Brisbane. We'll see how we go, Brendan. No promises. I'll have to look on dates and availability. Steve, I've done Tommy's training. We've done that. Thanks, Steve. Good night. Good night, Rach. Thanks for joining me. Thank you for all the positive comments. Just going through. Any other questions? Type them in again at the bottom. Are you looking at any other areas in the US? I'm planning to go up north to New York, Ohio, etc. to look at the properties. The three areas I'm concentrating on, Brendan, are Texas, Georgia, and Florida. Is Joe's Crab Shack available for sale? I do not think so. They do a roaring business there. I think I deleted a comment. Sorry about that. I'm pressing buttons and I am deleting. All right. I do not believe that there are any more questions. I'll give people another moment or two to type one in if they've got one. Otherwise, we'll sign off. I'll go home, kiss my kids goodnight, give them a cuddle, and then look forward to chatting with you again. Looking forward to the US fund meeting. Great prep at what you've done and got on the cards. You're welcome, Tamara. For limited funds, e.g. 20K, where to start for the US tax liens? Steve, start in Florida. That's where I did, and start in May, which is when the next round of online auctions are. All right, guys, I will leave the questions going online a little bit longer, but I will sign off now for those people who are watching and who have other things to do. Thank you for joining me tonight. I hope to see many of you on the Tour of Duty 2013 in May. I urge you to get your spot booked as soon as possible to avoid disappointment. Honestly, with my commitments for the fund, offering tours of duty is not my core business, and it's a gift that I make available, and hopefully you will be able to take advantage of it. Thank you once again. I wish you all the very best.